Welcome to a special edition of the AICPA Town Hall series. I'm Eric Auskerson, and with me is Lisa Simpson, and we're looking forward to providing this update to you. There's plenty going on, so let's get right into it. And we're recording this update on the morning of December 23rd. So welcome, Lisa.
Thanks, Eric. It's going to be a busy week for us.
Absolutely, and it's there's a lot of twists and turns occurring right now. So we're going to cover the status of the $900 billion stimulus bill and where things stand in Washington D.C., and then we're going to go through how we see the provisions. I mean, there's a lot of certainty in the bill related to the PPP2 program. With that said, there's a lot of uncertainty related to the timing of when it's going to be enacted. So we're going to be discussing that. And we're also going to talk about resources and capabilities. So let's kick this off and discuss what's happening in Washington, D.C. We all were very, very excited with the passing of the $900 billion relief bill that occurred earlier this week. And what we all saw last night was the president is not currently on board with the overall package. And there's a couple of important points here. There's the $900 billion stimulus bill, and there's also the $1.4 trillion funding bill for the government. And Trump is primarily concerned with some of the elements in the $1.4 trillion funding bill. He also wants to step up the direct payments from $600 to $2,000, and there's a lot of dialogue going on related to that item. But what does this mean overall? What it means overall is that things are going to be delayed. We still think it's very, very likely, almost a certainty, that the $900 billion relief bill will get enacted. We've been saying this all along. It's really a question of when. And now that timing is probably pushed out a week or maybe more. So we're going to get into that in greater detail as we go through today's session. And we've got a special slide just on timing. But let me just give you a real high level outlook. Our feeling is that it's probably going to take a week or so for this to get enacted. And that's probably going to push out the go live of PPP2 to the second or third week of January. And that's how we see this morning, December 23rd. And every day things could change, but that's how we see things shaping out right now. Lisa?
Thanks, Eric. We wanted to give you a look at how some of that major funding package is being spent. So here's a good visual for you, compliments of the Wall Street Journal. But if you look at this $325 billion in small business relief, that's where we're going to spend a lot of our time talking about today. There are so many provisions in the entire bill. We're not going to cover everything in detail today. There are lots of tax provisions. We're going to hit some of the high points, and then there'll be deeper conversations about those to come. But Eric, you want to talk about deductibility? I know it's been a big issue since we got the notice from the IRS.
Well, absolutely. I think we did a good job covering this in the last town hall. We're thrilled that this was part of the final package, and there were no special parameters around it. It's very clear. You will be able to deduct your PPP expenses for a forgiven loan from day one. We've stated that was the intent of the CARES Act, and we were thrilled to see this in the past legislation.
We are getting some questions about how does this impact tax basis for S corps, partnerships, and things like that. So our tax team is aware of those concerns. This is all brand new, so everybody's digging in, and we'll be looking to the IRS and Treasury with some of those questions as well. But it is a good news. Let's talk about some of the PPP2 specific provisions in the stimulus bill, and then we'll get into some other provisions later. But the PPP2 provisions are basically two categories. You've got the ability for a second draw for some of the hardest hit borrowers, and those are generally going to be limited to businesses with 300 or fewer employees, a 25% gross receipts decline in any quarter in 2020 compared to the same quarter in 2019. That has changed from the initial proposals that we had seen that were 30% just a week, 10 days ago. So we're happy to see that 25% threshold in there. We talked about this on the last town hall. EIDL and PPP loans should not be included in a gross receipts calculation. We've still got some unknowns about what specifically will be included for gross receipts. Is it cash? Is it accrual? How is it going to work mechanically? Don't have all the details on that yet, but those loan proceeds should not be factored in. Right now, it looks like it's based on a calendar quarter. I know that you've got fiscal year borrowers that may want to look at a different 3-month period. So we'll see where that plays out. Right now, it looks like calendar. One provision that is in the language in the bill is that to get a second draw on a PPP loan, the borrower has to commit that they've either fully used or will use the full amount of the first draw funds. That's intended to prevent first-time borrowers, once the program opens back up, from immediately turning around and getting a second loan as well.
And Lisa, but I've been speaking to many firms about this criteria, and one thing that is important to note is that it's just one quarter is required to have that 25% decline, and most businesses are going to be looking at Q2 2020, and if Q3 and Q4 were good quarters, you still will be eligible per this criteria, and I know we're going to get into discussing the economic uncertainty point later in the presentation.
That's a great clarification. Thanks for that, Eric. For second draw borrowers, the loan amount maxes out at $2 million. It's going to be calculated very similar to first round borrowing at 2.5 times average monthly payroll cost, but they've given a special provision for that harder hit category of restaurants, hotels, caterers, and NAICS code 72. They'll be able to borrow 3.5 or 3.5 times their average payroll. We got some clarity around how seasonal and new employers will calculate their payroll amounts. And a good, very borrower-friendly provision is that borrowers can use their 2019 payroll amounts or their 12 months prior to the loan application, whichever is better for them. Because a lot of borrowers have reduced payroll in 2020, so being able to use that 2019 gives them a greater borrowing capacity. We expect the covered period will be a choice of the borrower, anywhere between 8 and 24 weeks. Language in the first round of PPP said the covered period was 8 or 24. This appears to give the borrower some flexibility there, and the covered period is extended. SBA has 10 days from when the law is enacted to issue guidance on how this process is going to work. So they're already working on how this is all going to roll out, I'm sure, but we'll be looking for some additional information for them. You've also got a tranche of money dedicated to first-time borrowers. It's $35 billion of the appropriation. And again, eligibility will be similar to the first round with the addition of some new categories: 501c6 destination or C6 organizations, which are your chambers of commerce, state societies, economic development related organizations, and destination marketing organizations. They've got a few parameters, number of employees, and lobbying activities. Also, some news organizations have been added in for eligibility, and housing cooperatives.
So we think this new category is something that the firm should think about. I mean, there's 70,000 501c6s out there, so they'll be in a different spot in understanding all the particulars than the many businesses that are going for their second draw. So they'll need to be approached in a different manner.
Yeah. We also got some kind of one-off provisions that we wanted to make sure we told you about, because some of them are really important and address some frustrations from the first round of PPP loans. Schedule F, farmers and ranchers can use gross income instead of net. We've got a clear definition on who qualifies as a seasonal employer. And these last two items, I know we've heard from many, many times. Borrowers who returned all or part of their original loans because of confusion in the initial rollout may reapply for the difference. So if they borrowed 2 million and returned a million, they can go back and apply for that $1 million that they returned. If as long as the first loan hasn't been forgiven. And then also borrowers whose loan amount was impacted by the changing guidance around independent contractors, partners, sole proprietors. A lot of that confusion from early on in the process created situations where a borrower may not have gotten the full amount that they were ultimately eligible for. Now there is a provision in the law, in the act, excuse me, that says those loan amounts can be modified even if the first loan was fully dispersed. There are some businesses that are not eligible for PPP. And one of the things that I think it's really important to understand is that PPP is not designed for businesses that were not in operation on February 15th. So if the business was not operating before the pandemic began, then PPP is not the right program for them. We'll talk about a new category of relief around shuttered venue operators. So those are theaters, museums, zoos, and other organizations like that. They're going to be eligible for a grant program subject to some restrictions. So that means they're not eligible for a PPP loan. Based on some of the controversy in the first PPP round, publicly traded businesses are not eligible, lobbying organizations are not eligible, and then you'll see some of the other more narrowed ineligibility
That's right.
statutes. Right, loan forgiveness. So it's going to look very similar to the first round for both first and second time draws on PPP loans. So you've got the same types of costs: payroll, mortgage interest, rent, and utilities. We got some clarification around the ability to include group life, disability, vision, and dental premiums. And I know that some borrowers had been including vision and dental. Now this adds life and disability to that. But you've also got several new categories of expenditures that qualify for forgiveness. There are very lengthy descriptions of these categories, what does apply, what doesn't apply. So I've given you a link if you're bored in the coming week and you want to dig into those, you can. But here's at a high level: PPE costs, supplier costs, software, cloud computing, HR, accounting costs, property damage costs related to public disturbances that weren't covered by insurance or other compensation. And these categories apply for original PPP loans and new PPP loans, unless the borrower has already applied for forgiveness and been granted.
So, Lisa, when you look at this here and in the discussions we're having with firms, I mean, this has come a long way from when we originally was 75-25, the payroll to other costs. Now it's 60-40. You've got the 8-week or 24-week period, and then you have the expansion in eligible expenses. So more understanding and a lot more ability to make sure that these loans are forgiven, and that's the intent of the program. So hopefully this is going to make both the PPP one loans more straightforward to get that 100% forgiven amount, as well as the PPP two.
That's right. We also have, in terms of simplifying the process, there is a simplified loan forgiveness process for loans of 150,000 or less. The SBA has a little over 3 weeks from the date of enactment to actually release the form, but these are the requirements that are outlined in the text of the act. it can be no more than 1 page. And it requires some attestations from the borrower on their good faith efforts to comply, what the loan amount was, the number of employees that they retained through the program, an estimate of the amount spent on payroll. I found that interesting. But it also does require that the borrower retain records relating to these certifications. So I think this will be a welcome change for a lot of our loan borrowers, and we'll see what that form looks like when it comes out.
Absolutely, it's definitely going to be a welcomed change, and I know many of the firms and clients have been looking for this. One thing that we do know is if you've already submitted something to a bank, the bank is going to continue with your submitted application. Some of the banks will now, if the loan amount is below 150, will ask to wait for this simplified loan forgiveness form. But if something is in process, they will continue to process what has been already submitted.
Yeah, and I think this will result in a large number of loans being sped up into the forgiveness process once these forms come out. So this should be a positive move. There are so many other key provisions in the bill, but here are just a few that we wanted to point out because these have been getting a lot of questions through our town halls. So the first one, if I could have put confetti dropping from the sky, this is a big deal for so many of our borrowers who got idle advances and a PPP loan. They took the advance assuming that it was a grant, but are then finding out that it was impacting the amount of the loan eligible for forgiveness. The act has language that says that advance deduction will no longer reduce PPP loan forgiveness, and that is going to be retroactive. It's going to involve a lot of cleanup on the part of the lenders who have already processed forgiveness applications, but it's a big deal, and we're really happy to see that in there. Another provision is that the SBA will continue to subsidize existing 7A loans. It's a 3-month extension, and it is capped at $9,000 a month. There's some provisions for extending that subsidy period for underserved borrowers. And another great bit of good news is that the tax treatment of these subsidy payments is going to be the same as PPP loans, so not taxable income, and the expenses are eligible for deduction. There's a set aside in the new act for targeting idle advances, so reopening that idle advance program for some targeted businesses. Again, that tax treatment will be just like PPP. And I mentioned earlier, there's about a $15 billion set aside for these grants for shuttered venue operators. Again, not taxable income, and the expenses are deductible. There are some caveats around those grants, how they can be used just like any other grant, but still some good news for some hard hit businesses. We've got some unknowns that Eric mentioned in the beginning, and we've talked about a couple of them along the way. I think how that gross receipts is going to be determined is probably one of the biggest, and we'll be following that for you very closely. It gets complicated pretty quickly when you think about cash or accrual, so we'll be monitoring that. And the language in the act does give a reference for not-for-profits. That may be helpful for some. But again, we'll look to the SBA and Treasury to get that guidance out very quickly.
And Lisa, just on all of this, I mean, we've been saying this all along throughout 2020, but to assume positive intent, there is judgment that's going to be required in many of these areas, and documentation is going to be critical. Even though we have these simplified forms, as we know, there will be third-party reviews, so it's good to have a good file for your clients. And then there's still going to be this self-assessment of need in some form for these PPP2 loans. But we all know that we're living in a very, very uncertain time with the virus cases increasing, a lot of uncertainty out there. So for businesses that had a 25% decline in one quarter, they're probably going to be in a pretty good position to state that there's economic uncertainty and be able to apply for a second draw. Uh, and just back to the gross receipts, we're working on many of those elements with our platform, and we'll talk about that in a minute. But I think all of these elements, more information will be coming out from Treasury in the coming weeks, and we can assume that their positive intent to try to make this program work as intended.
Thanks, Eric. And on that documentation point, there is a set aside in the act for the SBA to fund some of the deeper reviews and audits of the loan application. So again, that documentation is key. Please maintain that.
Okay, this is a full slide, Lisa, here, so a little bit of an eye chart, but let's get into it because this is important. So it's something we've talked a lot about, lender and agent fees. So let's look at some of the existing bill language around the lender and agent relationship. Here's right out of the act: a lender shall be responsible for paying fees to an agent for services for which the lender directly contracts with the agent. That actually was our recommendation back in April to firms to form an engagement letter, and that is a requirement for this next phase of PPP. So you will need to have an engagement letter, a contract with the lender to receive agent fees. The lender fees for PPP2 are the same as they were for the original program. They're highlighted here. There's one additional element here, which I think is going to really help some of the smaller businesses with these smaller loan amounts. For loans of less than $50,000, the lender fee will be $2,500 or 50% of the loan principal, whichever one is less. So for very, very small loans, a $2,000 loan, the lender fee will be $1,000. But for the majority of those under 50,000, it will be a flat $2,500 fee, and that's important related to the agent fee, and I'll cover that in a second. And you can see the other tiers for the lender fees. It's 5% for the 50,000 to 350K loan amount, and it's 3% for 350 to 2 million, and over 2 million, it's 1%. And that's how it was in the first round. Now, here's what our expectation is around agent fees. The agent fees were specified in additional guidance that came out from SBA and Treasury. And basically what we're highlighting here is how it was depicted in the first phase, except for that first category, which we just took the same ratio for the agent fee. So for a loan less than 50,000, the expectation is it will be a $500 agent fee, and then for 50,000 to 350,000, 1%, 350 to 2 million, 0.5%, more than 2 million, 0.25%, and that's in line with the original PPP program. And just we put here at the bottom of this slide a couple of examples related to agent fees. So if it was for a $20,000 loan, agent fee of $500, $300,000 loan, $3,000 agent fee, a $2 million loan, a $10,000 agent fee. One other question that we always receive is, can firms bill for supporting the filling out, the assistance around filling out the application? And the answer is yes, you can absolutely bill for the advisory services there. And you also can receive an agent fee. This will be a firm by firm decision, but that was a misunderstanding with PPP1. There was some people that felt that, as due to the language in the act, that you could not receive an agent fee and bill for advisory services. That was incorrect. You are eligible to receive an agent fee and bill for advisory services. And Lisa, maybe you just want to comment on this. This is really just a firm by firm decision. I know some firms may just receive the agent fee. Some firms may just bill for advisory services. Some firms may do both.
Yeah, and we issued some guidance back in the first round of PPP around independence, and those statements still stand. But advising your clients around the different funding options in this time of economic uncertainty is a key component of the trusted advisor services that CPAs can provide. So understanding that you have the opportunity to work with your clients on what their options are, help them gathering the documentation, and helping with their conversations around which funding options to choose is very critical. But having this agent fee option is going to give firms some flexibility in how they approach their clients on those conversations.
Yeah, thanks, Lisa. And regarding the independence, we will be re-highlighting those documents that we publish in April, and receiving an agent fee um, does not impact independence. I mean, obviously, you can't be signing the form, and you have to be following the proper process. But receiving the agent fee in itself uh, will not impact independence.
Exactly.
Okay, so we kicked off the presentation here talking about timing. So let's talk a little bit more about it. So right now, the fact that the president has not signed uh, the stimulus in the funding bill does mean that things are going to be pushed out a little bit, because as Lisa reviewed, SBA and Treasury has 10 days from the enactment of the law to issue the forms. So right now, it looks like this is all going to, push out at least a week as the president, raises his concerns and they work through this. As we stated at the start, we do expect this bill to go into law and for us to be launching this PPP2 program in January of 21. This is a very, very important uh, next phase of business relief that is needed by these businesses, and the firms, again, are going to play a critical role um, in delivering this assistance. So we all have a little bit more time. It's a busy time of year. We're going to have a little bit more time to get our arms around this. And our projection right now is that this all gets sorted out, by the end of the year, early January, and this goes live, in mid January. So it gives you more time to prepare, put in place processes and capabilities for PPP2. So we're gonna talk about that now. Lisa, I don't know if there's anything else that you want to, share related to the timing discussion.
I think from a timing standpoint, you've all been really busy and working really hard all year. Having a little bit of extra time to prepare, and here are some of the things to think about as you are preparing, um, will help in the identifying clients, getting some of the documentation together, looking at lender options, thinking about are you going to choose to work with an agent fee structure, billing for those advisory services. So it gives you the ability to take your foot off the gas pedal just a little bit, and while still getting ready.
And everything that Lisa has just done a fantastic job of reviewing, we do believe will be what the case is when everything gets finalized in early January. So you really can start all of these discussions with your clients based on the information that we've just shared with you.
Great point.
So we've been working very hard at putting resources and capabilities in place throughout 2020. We started with issuing PDF documents, then we built Excel calculators, and then what we've done is taken a lot of the AICPA PCPS recommendations and guidance, and we've built them into a fintech platform. That platform, for the past many months, has been supporting the forgiveness process. Thousands of firms have utilized the beta version, and now we're moving it into this very important next phase. And we can go to the next slide here, where it's going to be able to support uh, the PPP second round. And actually, As we speak, this platform is being updated, and there are firms today that are beginning to start the application process for PPP2. Because even though the bill hasn't been passed, and you can't file it with the SBA, as Lisa just said, doesn't mean you can't start doing some of the work. And this platform is enabling that. So you can, and I'm gonna, on the next slide here, we'll show some of the, go back, you can stay on the slide for a second. We'll show some of the steps, but let me make some of the let me highlight some of the features. You will be able to receive agent fees. If for some reason you don't want to receive agent fees, you can decline that, but you will be able to receive agent fees through the platform. You can automate the imports of bank statements and payroll information. There's a lot of automation that's been put in place with some of the leading payroll providers. It has the integration into the AICPA's loan calculator. It will have the integration into the updated AICPA loan calculator, and some very important workflow elements where you can send the application for the client to the client for review, and then the client does the affirmations and the e-signature, and then this platform will facilitate the submission into the SBA systems. We are going to be having an in-depth overview of the platform next week. So in this slide here, it highlights our webinar that we're having next week. We're going to continue to have a lot of training sessions on this. The training session that we did last week was very well attended. So here's how you can register for it: cpa.com/BFP underscore webinar. And it's going to be next Tuesday at 2 p.m. And we're recording these sessions so you can also watch the archive.
Eric, one point on the platform, our team, the PCPS team, is actively working with Biz2Credit and CPA.com to build in guidance from our tips, our FAQ information into the platform, so that as a firm is trying to make sure that they're standardizing the process, they've got some information built into the platform to help with some of those common sticking points.
Yeah, thanks, Lisa. And Brad's doing a great job, and your team's doing a great job in supporting this. And the most basic level is free, but then there are enterprise versions that have what I think is a very, very reasonable fee. And in particular, if you're going to use this to process PPP2 loans and receive the agent fee, you need to have an agreement with the lender, which is going to be this fintech platform, Biz2Credit. So that will all be facilitated through the commercial agreement, and you will quickly pay off the commercial fee, which is between, I think, $500 and $1,000 as you submit just a couple of your clients' applications.
And the ability to manage workflow and user roles, I think, is a really important functionality built into those enterprise and premium versions.
So this is what the team will be reviewing next week: is the steps in the process, how you create an application. As I said, firms today are creating PP2 applications in this platform. So you create it, then you fill it out, then the process of sending it to the client for e-signature, the client doing the certification, you doing the document uploads, and then the process continues. And we'll walk you through this as this application is submitted to the SBA, and the process continues to the end state, where the loan's approved and the client is wired the money to their bank account. And then this platform will support the forgiveness process. And when you look at everything that we've reviewed today, there's so much information, and the way to kind of to manage this now is to really leverage platforms to make sure you're doing things correctly. The platforms have the guardrails, as Lisa said. The PCPS team, as well as a group of firms. There's a group of firms that we're putting together that are going to help us, QA and review this basically on a daily basis.
All right, we've got a few, we're going to switch from PPP and talk about a few other key provisions in the bill. One of them is around changes to the employer retention credit and paid sick leave. The changes to the retention credit are pretty substantial. And it looks like I've got I'm calling it the employer retention credit in one place and employee in the other, so I apologize for that. But the changes are very substantial and very favorable to the employer. So you'll see some of those outlined there. And the paid sick and family leave credit is also being extended through March 2021. There are lots of details that go into how to apply this employee retention credit to your 941s. Those are going to be covered in a webcast that our team is actively working on right now, and they'll try to have that out available to you as quickly as possible. Some of the other provisions are, you'll see them on the screen. There's a great Journal of Accountancy article that just came out yesterday. So look for that. It's many tax provisions appear in the year-end coronavirus relief bill. It's going to give you a lot of great information. But if you look at some of the key extenders that were covered into the bill, because I know extenders are always down to the last minute and can make planning really hard for your firm and your clients. Here's some that have been extended, some permanently, some to the end of 2021, and then some through 2025, which is when the TCJA has some expiring provisions as well. We talked about at the beginning some of the major components of the legislation, but here they are. Stimulus checks, that's been talked about. So right now the legislation says 600. President Trump would ask that to be 2,000. So we'll see where that ends up. But there are enhanced unemployment benefits through March 14th. Emergency rent assistance that will primarily be going to the state for residential rent assistance for both renters and landlords. And a provision allowing for 100% business expense deduction for meals if it's provided by a restaurant through the end of 2022. About a month ago or so, time has no meaning anymore, we had Mary Folster with our Governmental Audit Quality Center on a town hall talking about concerns around single audits, because some of this new money in the CARES Act, going back to the original CARES Act, had single audit implications, and there could be entities that were subject to single audits for the first time. She mentioned that we were waiting on some really key guidance from the OMB around how those audits will be working, and that actually has now been received. So we've got that guidance. We also have a 3-month extension for audit submissions on single audits if it relates to COVID-19 funding. So that's a narrow band, but think about the Coronavirus Relief Fund, Provider Relief Fund, and the Education Stabilization Fund. You've got, you'll have full access to the resources that the Governmental Audit Quality Center is providing. So you'll see the information on how to access those. Eric?
Well, we're getting to the end of today's presentation. This is a slide that many of you have seen many times. What a defining year it's been. We now are moving into this next phase of business relief activities. 2021 is also going to be a lot about working on business model adjustments, playing the trusted advisor role, doing forecasting and cash flow projections for your clients, and absolutely we'll continue with the compliance elements of forgiveness. So we think this is going to continue throughout 2021, potentially even go into 22. So this is an important business line for the firm. As you plan about 2021, think about how you're going to resource it, put the capabilities in place, the processes in place, and really make this an important part of your practice and how you support your clients.
I've been telling everyone all year that CPAs have been superheroes, and you all deserve capes for what you've been through, but that role is going to continue on into 2021 for sure. CPAs can also provide a great service around reaching out to the underserved and underbanked small minority businesses. We have an opportunity with PPP2 and the capabilities that have been built into the CPA loan portal to make that a process that is simpler for people to get involved with. So please do consider how you or others in your firm or in your business can make a difference by working with your local chambers, economic development agencies. The resources are available to you to help make sure that process has the biggest outreach as possible.
And there'll be more to come from us on that in January as we think through this, as we think through how our platform and our resources can help the underserved, and how the firms can play a critical role in getting some of those applications submitted.
I'll go ahead. So here's a quick look at some of the topics we've covered, and you're always welcome to catch the replays at AICPA TV. There's a link on the left-hand side that says Town Hall Series, and that gives you access to all of those if you missed one of these hot topics and you want to go back and take a look at it. In terms of PCPS resources, I know that we are actively working on our FAQs. Those are going to be one of your best places to look if you're trying to figure out a particular provision. Once the bill is signed, we'll start getting that guidance up as quickly as possible. We'll have some tweaks to our calculators because you've got new costs that are eligible for forgiveness, some small tweaks to the loan amount calculators. And so we'll be actively working on those and get them up as quickly as possible. But CPA Loan Portal is being updated as we speak, as Eric mentioned earlier.
It's an active discussion out there, Lisa, on social. So Lisa and I, and many of you are staying active. We will continue to provide updates to you as soon as we're made aware of them. And I think this is a very effective way to stay current. So thanks for a lot of your communication on social media as well.
And if Twitter isn't your favorite medium, it's okay. Sign up and just follow that hashtag AICPA Town Hall, because that's going to be your fastest way to get the information. Doesn't mean you have to retweet, just means you can follow it to stay up to speed on everything.
So this brings us to the final slide. Once again, we just greatly appreciate being with you. So thank you for your time. And we are most likely going to do another special recorded town hall next week as all of this continues to evolve. We are going to continue to have discussions with the governmental officials, with Treasury and SBA, with the lending community. And what we do every week is we bring you the best available information. So we'll try to do that next week. I think as we look at the timing, all of us can, you can take a break as we come to the end of this week. Take a break, enjoy the holiday period, but do stay connected. Think about how you can start having those client discussions and putting in place the resources and capabilities to get a great start to 2021. So here's our Twitter handles. Lisa, any parting words from you, and just great job to you and your team and to the broader team that help us put together all of this information.
Thank you. And I just want to say thank you to everyone that's been joining us on this roller coaster ride for the past 8 months. Your support and encouragement and feedback have been really helpful to us. It has been an honor to be able to help you this year, and we look forward to continuing it.
Well said. That's all for now. Thanks.
Thanks.